What's up, you guys? If you're somebody who's new to trading and investing, you're definitely going to want to stick around it for this video because I'm going to be going over 3 things tonight that you really want to avoid if you're somebody that's new to the game. These are all things that, the best of us, we've had to kind of learn through the hard way. So I felt like if I could put out some content out there that would help some people to avoid some of these growing pains that I had, then I think that that could be very useful to you. So the first one is definitely going to be something that you might be like, oh yeah, that's a no-brainer. But it's something that's very simple. It's just simply getting started. I know that's one thing that I dealt with a lot was procrastination. And, it's still something I struggle with every now and then. I'm definitely getting better at it. But if you are, somebody who's young, 18, 19, 20 years old, I mean, hell, there's even 16-year-old kids opening up brokerage accounts these days. Get in there, open up an account, fund it with, some margarita money, something that you don't really care too much to lose, and just, start with buying one stock, like Apple or something like that, something that ain't going anywhere, and go from there, right? But just get familiar with using the tools, and at least at that point, right, you have some skin in the game, whether you buy $100 worth of Bitcoin or you buy one Apple stock or whatever. Once you get that first kind of step out of the way, it makes the other things that we're going to talk about a heck of a lot easier, especially in step number 2. So that's one of the biggest things I find that a lot of people have a hard time with, is just simply not getting started. Time is your friend in this game of trading and investing. There's no doubt about that. The power of compounding is absolute magic, and we want to make sure that we're getting the most out of that time that we have on this earth to create as much wealth for ourselves as we can, so that we can live the lives that we want and desire. So now this kind of ties into a little bit in mistake number 2, and that's people who kind of just they don't have a plan, they don't have any sort of strategy, they don't really know what they want, they don't have any sort of goals or anything that meaningful that they're working towards when it comes to evaluating their performance and everything like that. So I would say step number 2 for sure is figure out a plan, figure out what your goals are, and find a strategy that is going to work best for you. Now, that could be something along the lines of dollar cost averaging. Maybe you want to learn a little bit more about technical analysis. Maybe you want to learn more about value investing and how to read cash flow statements and balance sheets and properly evaluating companies, that sort of stuff. There's no real one size fits all. It really just depends on how much time that you have as the individual. That's definitely the most important thing. If you only have 1 hour per month to spend on this kind of stuff because you have work, you have a family, all these other things going on, you're probably not going to be getting out there and day trading, making 30, 40 trades on any given day. Probably not a good idea, but something that can be, maybe a little bit more effective for you is, just dollar cost averaging into an index fund, or, learning the very basics of how to understand and read a chart, and, what a relative strength index is, and that kind of stuff. Something that you can kind of set it and forget it for, prolonged periods of time. Value investing as well, you could throw that in there for sure. But definitely one thing I see a lot of people make is they just go, oh, well, my friend Jerry said that I should buy, Tesla when it was up at like 1,000 or whatever. And, he said Tesla's going to the moon and I couldn't lose. So I just threw everything I had in there. And, that's usually a recipe for disaster. So it's definitely a good idea to have some structure within your trading and investing, and have some goals and some targets that you're trying to hit, and be strategic and methodical about how you go about these things, right? Everything that we do in this world is based on probability, not what's possible, right? So if we're playing a game of poker or blackjack, right, and the dealer has a 2 down with the card, and I have a 9, and maybe 2 9s or something like that, I'm probably not going to go hit, right? Because yeah, I might get that 2 and I could get 21, whatever, and I win. But like, let's be realistic here. If I do that 100 times, how many times am I likely to lose? A ton, right? So if you start to wrap your head and kind of get familiar with, operating on the basis of probabilities and having a strategy and a plan that allows you to do that repeatedly, then you're just going to win consistently, right? And that's all success is just simply a series of small wins. So I really wanted to take a lot of time there on that number 2 and really hammer home a couple key points there. But I think the most important one here, something that I think all of us humans are very, we are, gullible when it comes to our emotions. We get, overly excited and then overly sad, right? So it's really important that we don't get into this habit of investing in the FOMO, right? Like, you see everybody on, TV right now. Everybody looks like a freaking genius, and everyone's getting rich, blah, 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 right? That's going to be the time when you want to kind of think kind of counterintuitively. At least that's what's worked really well for me. Again, not financial advice. This is just strictly financial opinion. Just be sure to really manage those emotions and make sure that you're, sticking to whatever plan and strategy that you have. If you're trying to buy things when they're cheap and sell them when they're expensive, you're probably not going to be wanting to chase, the price action when, everybody, on the news is talking about it. Maybe grandma's telling you to buy, XYZ Incorporated or, 123 shitcoin, whatever it is. It's a good idea to definitely manage those emotions and make decisions based on data, not feelings. Feelings are a good way to go broke in this game. It's happened to me in the past, and it didn't really feel too nice. And I'm always open to talking about what mistakes and lessons I've learned from the past. But please, please, please avoid investing and trading with your feelings and focus on charts, data, and the boring stuff like spreadsheets. That's definitely the best way to go about it, in my opinion. Of course, if you have different thoughts and opinions, definitely let me know down in the comment section. I like interacting with people, so any questions, anything like that, drop them down there. And be sure to hit the like button, share this with more people so that more people who are looking to get into the self-directed trading and investing game. They don't have to go through some of the pains and the lessons that some of us older guys had to deal with in the past. We can avoid those and start ourselves off on the right foot with building good habits. So if you like this kind of content as well, just stuff about unplugging from some of the uncomfortable lies that we're taught about money from our parents, institutions, school, whatever, definitely be sure to stick around and subscribe. I'm going to be coming out with more content in the next couple of days and into the future as well. So be sure to stick around for that, and we'll see you on the next one.